Hello and welcome everyone. I'm Davon. Thank you guys for joining today for our webinar for the IRS Form 990 Easy hosted by Plante Moran. Before we get into the 990 webinar, we just wanted to go through a few things for CAC, some information and some welcomes. As I said, my name is Davon Nichols. I'm one of the grants managers here at CAC, and I'm delighted to be here with you all today. Thank you so much for joining us. Before we get started, I do want to take a second to invite my teammates to just say hello for a quick second. So with me today, I have Julia,
Hi, everyone. Thanks for joining us.
Maya,
Hi, good to be here.
and Laura.
Hi, everyone. Thanks for joining.
And then we also have Jake.
Good afternoon. Good to see you all.
Thank you, guys. So before we get started, we want to acknowledge that the land that we stand on and the place that we call Cuyahoga County is land that has been claimed by the United States government through forced displacement and treaties negotiated in bad faith. We acknowledge those of the Shawnee, Niami, Erie, Ottawa, Potawatomi, and Haudenosaunee Confederacy whose lands we stand on, and thousands of Native Americans representing over 100 tribes who currently live in Northeast Ohio today. We thank the Lake Erie Native American Council for helping us develop this acknowledgement. We also want to take a moment to uplift CAC's value of equity. We lead with racial equity in our work because the creation and perpetuation of racial inequalities is embedded into government and grant making. We confront the white supremacy that resides in our work because racial inequities across all indicators of success are deep and pervasive. We also recognize the power and potential that organizations who produce arts and cultures programming have as bearers of culture. These institutions have power to write the narrative about who belongs and who is valued. We encourage art organizations to connect with resources to advance equity in your own work. Please visit cacgrants.org/equity or contact our teammates to learn more. So here at CAC, each grant opportunity provided by CAC requires financial documentation to be considered for funding. General operating support requires your 990 or 990 EZ of your most recently completed fiscal year. A 990 EZ or 990 indicates to CAC that your organization potentially has the capacity for large grants. Arts and cultural organizations with one of these could be eligible for up to 25% of their total expenses in their 990. Cultural heritage also requires your 990 or 990 EZ, but of your two most recently completed fiscal years. Project support requires your 990, 990 EZ, or your 990 N of your most recently completed fiscal year. We do want to make note that what you file impacts your maximum grant request amount. So organizations who submit a 990 N are eligible for project support grants of up to $5,000. Please refer to page 7 of the 2025 project support guidelines for more information. You will have the chance to review updated general operating support and cultural heritage grant guidelines when their application cycle returns next year, 2025. For now, we will provide the link to our website to allow for you to browse for more information or to contact us for more assistance. With that, I would like to introduce Maggie Matthews and Michaela Leach from Plante Moran. Plante Moran specializes in audit, tax, consulting, and wealth management services. We are excited to have Plante Moran here to host this webinar today. Thank you to the both of you, and the room is yours, Maggie.
Thanks, Devon. I think I can request control. 1 second. Let me share my screen. Let's see, can everyone see my screen?
Yes.
Perfect. All right, so hi, I'm Maggie Matthews. I will be one of the tax nerds presenting today. I've been at Plant for about 5 years, and I predominantly work in the exempt org or nonprofit and healthcare sectors. And I have Michaela here with me today.
Hi everyone, I am Michaela Leach. I have been with Plant Moran for about 8.5 months now. And since I'm so new, I don't really have a specialization like Maggie does. I kind of just work on a little bit of everything. So we'll go ahead and get started.
Thanks, Michaela. So to just start off, so I'll cover the 990 EZ core form, and then Michaela will present on a few additional schedules that are most common that you'll see. So it'll mostly be with the 990 EZ. So if you are required to file a full form 990, keep in mind it's a little bit more involved, but a lot of the general things that we're saying is still applicable. So one of the kind of key reminders here is the 990 EZ and 990 are required to be electronically filed. So this link will send you to the acceptable kind of softwares or websites to use to e-file per the IRS. And so I'll move into some key reminders. So the EZ is an annual filing. You're going to want to make sure to file it every year. And the due date is based on your accounting year end. So for the most of you, I'm guessing you're either a December year end or a June year end. Those are the most common we see. So your return is due the 15th day of the 5th month after your period ends. So if it's December 31st, then May 15th of the following year is when your return will be due. And if you need an additional time to file, you can apply for an extension through the Form 8868, which extends an additional 6 months. So if your calendar year end, it's due May 15th, it'll extend you to November. And just keep in mind, so the EZ is you're required to file if your gross income is more than 50,000, but less than 200,000, and then your total assets are no more than 500,000. So if you are larger than both those amounts, you will be required to file the full Form 990. So some more key reminders is make sure to check your state requirements. So I'm guessing a lot of you are based in Ohio. So Ohio does have an annual charitable filing. You have to file every year with your due the same day basically as your 990. And it's really all the information on there. You go to the Attorney General website of Ohio, you can kind of file through there online, and then there's usually a payment depending on the amount of assets you have that's capped out at 200. But if you're not based in Ohio, just make sure to check your state requirements for registration. And then the biggest thing about the 990 is that it is publicly disclosed. So we always try to remind people that this can be pulled by really anyone. The IRS will have it on their website. You'll just have to look yourself up, and then anyone can pull your current year and past year returns. So this is just a really helpful thing to keep in mind, especially when you're writing your exempt purpose and your program service accomplishments and your disclosures, that there's possibly going to be other readers for this form. A lot of the time we see it's media, donors, kind of people like that who will pull and either look at it or scrutinize it. Sometimes, hopefully not, if it's the media. So just keep this in mind. And generally, we recommend keeping your records for a minimum of 3 years, just in case someone does ask for prior year returns or you are pulled for an audit from the IRS. It's just helpful to have those records. And then while you're preparing the return, remember to round off cents. So we only want whole dollars being reported on the returns and schedules, and complete all the lines. So even if it's a line that instead of leaving it blank, put a 0 when appropriate, unless it explicitly instructs you to skip a line if you've answered yes or no, things like that. Just remember to complete every line as you can, just to avoid any missing or incomplete parts. And so I'll go through the core form of the 990EZ, but like I mentioned, there are additional schedules that you might possibly have to file along with your core form. So this is a list of all of them. We won't go through all of them today. Michaela will highlight Schedule A, B, G, and O, which are the most common ones that you'll see. So she'll delve a little bit more into those schedules a little bit later on. So I will then start walking through what the EZ will look like. So you have your page 1, which this is your basic information, your name of your organization, address, your accounting method, your tax exempt status, just kind of the basic information, your EIN. And then if you did have anything change during the year, so an address change, this is your final return maybe, and a name change to your organization, you're going to want to make sure to check that box B if any of those have occurred during the year. And this is from the 2022, but the 2023 looks exactly the same. So, and then further down on page 1 is your breakdown of revenue, expenses, and change in net assets. So this will just be your general income statement items that you'll fill out each line for. If you're doing the full form 990, this section is a little bit more involved. Your revenue, your expenses, they have their own separate page. And for example, expenses have to be broken out into program management and fundraising categories, but for the EZ, they don't make you get that detailed. So you'll just have to do kind of your basic line items here. And then on to page 2 is the balance sheet. So again, this is just going to come from your financials. The key thing I want to point out here is that your net assets on line 27 must agree with the amount of net assets on line 21 on the page before. The return will not be accepted if those do not tie out. And Michaela will get into Schedule O a little bit further, but with your other assets, you're just going to want to detail out those further on Schedule O instead of, because there's only about 2 lines to describe your assets here. And then further down on page 2, so this is where it gets a little juicy. This is where you're going to show your charitable purpose. You're going to brag about your accomplishments. So this is really where you get to show your readers what you're doing, what impacts you're making, what your organization is providing. And try to be clear and concise, but also like use this to brag about your organization. So you will want to fill out based on your top 3 activities on this line 28 through 30. And then you are required to report the expenses associated with that activity. So not all your expenses might be related. You might have some that's administrative, but the ones that you can tie back to your program service accomplishments, you're going to want to report here. Basically just shows the readers how your money is being spent on your exempt purpose. And then further down on page 2 is the compensation. So this is another one that gets looked at because the return is publicly disclosed. So you are required to report the compensation of your officers, directors, and key employees. So your officers, I'll go into a little more deeper definitions on the next slide, but your officers usually pertain to your executive directors, your CEOs, your CFOs, and then your board members you'll want to list. So you will have to report their compensation, and it's split between reportable compensation and then additional. So health benefits, deferred compensation, non-taxable. I'll give a little bit more detail on that in a little bit. You'll also want to report key employees. So these are going to be people who have they work on the operations, they have key responsibilities, they're similar to a position of like a CEO or CFO, but they're not required in your organizing docs, and that they're compensated over $150,000. So if they're not compensated over that amount, then you're not required to report them. Another key thing here is for your board, make sure to report everyone who served at any point during the reporting year. So even if they served for one day at the beginning of the year and then left the board, we're still gonna want to report them. And even if they receive no compensation. So for officers, there isn't a compensation limit. You're gonna want to report any amount of compensation they received, unlike the key employees where they've got that 150,000 threshold. And then you're going to want to report the average hours per week. So this is it's sometimes hard, especially with the board. They don't meet every week, they meet every month or so. Just give a realistic estimate of how much time they're basically spending in their position per week. So here are a little larger definitions of what is an officer versus a director. So I won't kind of read these word for word, but just keep in mind, so officers are going to be someone who's appointed to manage those daily operations. So your president, your vice president, your CEO, and they're usually referenced in the organizing docs, so your bylaws, and have kind of that power to control. And then your director is going to be someone who's not involved in that daily operation, but they have voting rights. That's their key word, is voting rights. So again, they're usually authorized in your organizing docs, your bylaws, but they're not involved in those managerial or daily operations, unlike the officers. And so compensation. So this one is, like I said before, probably the most highly looked at, especially by media. So there's some kind of nuances and tips to keep in mind. So when you're reporting your compensation, remember it's based on your calendar year. So it's pretty easy if you end on December 31st, you'll just be reporting compensation from January to December of that year. But if you are on a tax year end of June 30th, then you still are required to report compensation based on the calendar year end. So you won't be reporting from July 1st to June 30th. It'll still be January to December of the year you start in. So if your tax year end is June 30th, 2023, you will report basically calendar year 22 compensation, since you started June 1st, 2022, or July 1st, 2022. And then just make sure you're not duplicating the compensation in columns C and D. Just don't need to inflate anything. And then, so here's a few more tips, just so the officers and your key employees, the amount of reportable compensation is going to be what's reported on their W-2. So if you're not sure what to report, look at their W-2, and that's going to be either box 1 or 5. And that's what you'll report there for their reportable compensation. For directors, it's going to be what's reported on their 1099. So a lot of times directors aren't compensated, but in the case that they are, I would look there, or if they don't receive a 1099, just any amounts that were paid to them during the year, you're going to want to report. And then, so I won't read all this, but these are just some examples of deferred compensation. A lot of it will apply to retirement plans. So just make sure to take a look through this. If you're not sure what to include, health benefits are one of them as well. And then, non-taxable. So this is included in that column D, even though I say E here, but so this is just those fringe benefits, expense reimbursements, things like that. Again, I won't read all of this to you, but refer back to this if you're questioning like what to report. So then moving on to page 3, this is where there'll be a lot of questions And based on your answers, it may trigger additional schedules or disclosures. So this is when make sure you're answering every question, unless, like it says, it's an if or a skip question, but you'll be able, they'll make it very clear. And if you're not sure what a question's asking, or you want to know more about it or why they're asking it, the instructions do a good job of laying out the explanations for each question. So I'm going to highlight some of the questions that you're going to want to make sure to look at. So a big one is changing any significant activity or organizing docs throughout the year. So did you expand your services? Did you add another key accomplishment that you're kind of adding to that first page? You're going to want to just indicate that and give more of a detailed description of the change in Schedule O. Or any changes to your organizing or governing docs. So just kind of providing more information. The big thing about the 990 and 990EZ is transparency. That's like the key word. I'm shocked I haven't said it already. But so we'll want to be as transparent as possible on those changes and why those changes are occurring. Next one are revenues completely unrelated to your charitable purpose. So it is a myth that nonprofits can't make a profit or that they never pay tax. So if you do have a revenue source that is completely unrelated to your charitable purpose, it is potentially taxable. So it would require a 990T, which is the unrelated business income return. So there are a lot of kind of stipulations and exclusions for unrelated business income, but just kind of keep in mind, look at your revenue streams and make sure that you're able to tie it back to your charitable purpose. An example of unrelated business income we see a lot is mostly really related to rentals. So if you have property that you're renting out and it's to an organization or for a service that is completely unrelated to your purpose and it's debt financed, that has a high potential of being taxable. So for example, if you own your building, it's debt financed, but you're renting out a portion of it to an ice cream shop, it has nothing to do with your purpose, that rent potentially is unrelated business income and it's potentially taxable. So just keep this in mind, especially if you're opening up new revenue streams, thinking of how it's relating to your charitable purpose and its not sole purpose is to provide a profit. And then these are two questions that possibly trigger you filing the full Form 990. So if you have a donor advised fund, that will automatically nix you from filing the EZ and you'll want to file that full form. And if you control another entity, so if you have a subsidiary that you have 50% more or more control over, then you potentially have to file that full form. And then lastly, on the highlights of these questions is ones regarding political activity and lobbying. So this is one just to be careful about, since if you are a 509(c)(3) or 501(c)(3), you want to refrain from political activities, especially one way or the other. So, and lobbying activities. A common one we see with lobbying is if you are part of an organization. Like I said, I work with healthcare a lot, so that involves hospitals. A common one for them is they're part of medical associations that they'll pay dues to, and then that association lobbies for their like industry in a whole. The portion of their dues that they paid related to lobbying, which is usually like 6%, just needs to be disclosed. So this requires the Schedule C. That's a common one, but so just be careful of what you're getting into. Make sure the organizations, if you are part of, that are paying dues to, make sure that they're not having any lobbying activities that you might have to disclose on your 990. And then lastly, your signer page. So this is going to be typically your president, your VP, your CEO, anyone who's authorized to sign on behalf. It's usually listed either in your organizing docs or they have board approval. But that is the core form in a high level. And so I'm going to pass it off to Michaela for the additional schedules, and then we'll open it up to questions.
Thanks, Maggie. So as she mentioned, there are multiple schedules that you could have with your 990 Easy. We're just going to highlight a couple of them that we frequently see when we have people file 990 Easies. So starting with Schedule A, this is where you're going to define your public charity status. The most common that we see are Type 7, which are entities that receive most of their support from the general public. Type 10, which is where 33 1/3% of revenues come from contributions, membership fees, and gross receipts. And then also Type 12, which are organizations operated to carry out the purposes of a specifically publicly supported organization. You also probably just heard me say 33 1/3%. This is another thing you're going to see on Schedule A. This is called your public support test. So you just have to make sure that your support is at least 33 1/3% from the general public. Basically, it's just to ensure that all of your donations aren't, or all of your contributions aren't just coming from one or two donors in very large amounts. So in order to complete that, you're going to take information from the revenues on Part 1, which Maggie talked about previously. And if you don't meet this 33 1/3% public support test, or you're close to going under, there is a risk that you could potentially lose your exempt status. So you'll want to make sure you're keeping track of that, staying well above it. But also keep in mind, if your organization's in the first 5 years, you aren't subject to this test. So if you're just going through the first year, you're like, oh no, it's really low, don't worry about it. You have 5 years to make sure you get it up. So then moving on to Schedule B, this is where you're going to list out all of your contributors and donors who have made over $5,000 in aggregate contributions. The thing to keep in mind here is that it's aggregate, so it's for the entire year. So for example, you have a donor and they donated, let's say, $1,000 a month. While they never donated $5,000 all at once, aggregate throughout the year, they donated $12,000. So that means they're going to need to be reported. When you're reporting these, you have to list the name, the address, and amount for each contribution greater than the $5,000. And if you have an anonymous donor, you still have to list the address and the amount, but you can substitute the name for anonymous. So don't worry about trying to track down a name that you might not know. Another thing to keep in mind is that this information is only submitted to the IRS, so it's not made publicly available. So if you have a donor who might be worried about something like that, you can assure them that it's not going to be given out to the public, it's only to the IRS. And then also the total of all contributions listed on Schedule B can't exceed the amount listed on Part 1, Line 1. All right, Schedule G, this one is for fundraising. So any events that you hold for fundraising that earned $15,000 of revenue, they need to be listed. So if you just hold one, you have to report that. If you hold 5, you just report the largest 2 and then combine all of the rest. So you'll have 3 different columns in your schedule. And these will be detailed out between gross receipts, contributions, and expenses. So starting with your gross receipts and contributions, you can see here we have a quick little example. So if you hold a golf outing during the year for a fundraiser, and let's say the ticket for that fundraising event was $50, but the actual cost to golf is usually about $30, then your gross receipts is going to be $30 and the contribution is going to be $20. That's just a quick example. You can really use that for any fundraising event that you do. But if you aren't sure what the contribution should be, it should be what's reflected in the letter to your donor. So you can use that as a good guide on when you're reporting this. You also have to break out your expenses. So there's multiple different expenses. There's things like food, your facility rental, cash prizes, and then you also have another category. So if there's anything that might not fit, you can just kind of throw it in there together. And yeah, I think that covers Schedule G. So now moving on to Schedule O. This one is basically a catch-all schedule. So any words or information that maybe ran over from a previous page, or you have things like Maggie mentioned where you have your other assets or other liabilities that need broken out, that's kind of going to go all onto Schedule O. Schedule O also gives you the ability to write anything that you want to keep bragging on yourself, give more information to people that they might need it. But just note that this is made publicly available. So anything you put in this, the public, the media, anyone who wants to see it can pretty much see it. And so just consider leaving out specific details if they aren't required, but don't leave out things that are required by the IRS for you to explain. So that concludes our presentation. We are going to send this deck out to everyone. So there are some helpful links here. You can also go back and reference some of the stuff that Maggie and I both talked about while you're working through this. And here's our contact information. Sorry, Maggie. And with that, we'll go ahead and open it up to questions.
I had a quick question, if I may, about what you talked about profits on the 990, and you talked about profits that aren't related to your core purpose. What if you end out the year and you have profits because you got more donations than you expected or more grants that you expected, and it comes out as a profit in your financials? How is that dealt with?
Oh, so that is completely okay. You're allowed to be in a net gain or profit overall. I'm talking more about, those are like specifically revenue streams that you have that are related. So let's say like, it's just going to be basically an activity that you are a part of, whether it's renting or trying to think of another good example. We've got, or investments sometimes lay into this if it's a specific joint venture. That is kind of more what we're talking about. It's okay to be in a profit. It's more so if you are participating in a revenue stream or have an activity that's producing revenue, even that activity doesn't need to be in a profit. But if it is not related to your organization's exempt purpose, there are a couple other aspects of unrelated business income, a lot of it. So basically, if you're working as a business, you're providing a service that's specifically for profit, that is going to be your unrelated business income. So, and it's potentially taxable. So overall, you're allowed to be in a profit. That's good, because nonprofits like you still have to run like a business. You still have to have money to provide services, to pay your employees. So it's mainly the activities you are providing to gain that revenue is relating to your exempt purpose. That makes sense.
Yeah, thank you.
Okay. I have a quick question.
Yep.
So we are in our first year. This will be our first filing. We have had almost no income whatsoever. We have no paid employees. All of that's in the plan, but not happening at this moment. So are there any tips that you would say for when we file our EZ?
Yep. So if you have no income, if it's under $50,000 in your gross receipts, you actually can file a 990N. I know the EZ is required for grant making here. So if you don't, so you can file the 990N. It's just, that's like an e-postcard basically. You can file it through the IRS's website, especially if you have no activity. It's sometimes easier.
We have some activity.
You have some activity? Okay.
We've had some income and that sort of thing. It's just so limited, and there's no staff right now. There's no one like that to getting any money.
Yeah. So you'll still want to list your board on your, but if you don't have any compensated employees, those aren't required to be listed. So it's really just the board and the officers. And then just making sure you're marking that initial year. Other than that, you can kind of prepare it the same.
Okay. But the 990, since it's required for granting and we're going to be applying for granting, I probably need to do the EZ, not the N.
Yes,
So,
you can file it.
Sorry, I'll jump in about CAC's grant making in particular. The 990N is acceptable for project support grants up to $5,000. And in your first year of being a CAC grantee anyway, that's the max request amount. So I would recommend a 990N if that makes sense for your organization. In your
Okay.
first year of grant making, it won't make a difference whether you do that one or not.
Great, thank you.
There is another question in here from Paula. Please define public support. Can you guys speak to that one?
Yeah, so basically with your public support, it is just going to come from multiple factors. It can be from the government, from just general support, companies. There's not really a huge limit on who can donate. It's just that 33 1/3% test is basically there to show that your public support, that your funds that you're coming from, either your contributions or your program services, it's not just coming from one or two people or organizations. If that's the case, you're then probably more considered a private foundation. And that's just what the Schedule A is kind of proving with public support. So it's just more in reference to varied sources of revenue rather than just a few, if that makes sense. It's just, yeah, showing that your overall support is from the general public rather than a private individual or company. That answered your question. And that I will also mention, so back to kind of that unrelated business income, that won't be included in that public support percentage. So it's also just a way to prove that your main sources of revenue aren't just from like unrelated business income. And if you have any other questions that you think of later, feel free to reach out, to shoot an email to Michaela or myself, and we'd be happy to help you.
Perfect. Thank you so much, Maggie. And same to you, Michaela. So as Maggie said, if you guys have any more questions, please feel free to use the information on the screen. We also will be providing, or we have provided a PDF, but if you're new and you're just joining in, feel free to reach out to me or one of our teammates, and we will be sure to get you the information as well. I do want to give a few moments to see if anyone has any final burning questions. But if not, I'll give you some time back in your day.
I'll also just mention that coming up on May 2nd, that's this Thursday, we will have a grant opportunities workshop. So our next grant making cycle starts very soon, in the next few days, in fact, for grants for 2025. So I just dropped in the chat a link to our new applicants page, which includes our workshop opportunities. I don't know if there's anything else I should say there.
No, I think you covered it. And we have a virtual opportunity for the Grant Opportunities Workshop this Thursday. And the following week, we have an in-person opportunity, I believe Thursday, May 9th. So if one or the other fits your schedule better, or it's easier to meet us virtually versus in person, you can take that into consideration. But all of that is included in the link that Julia just shared. And our eligibility check process for project support grants is starting this week, this Thursday. So we are excited to start working with everyone.
Perfect. Thank you, guys.
Great. Thank you,
Okay.
everyone, for listening to us jabber on about tax.